Good afternoon, everyone. My name is Chris Desi, Chief Revenue Officer here at Diamond Standard. Welcome to the Diamond Standard webinar. Let's get right to it. So our agenda is going to be discussing the genesis of Diamond Standard, our vision, our roadmap ahead, and then a couple of frequently asked questions. And of course, if there are additional questions, please do email me, chris@diamondstandard.co. So the genesis of Diamond Standard, I always find this to be a fascinating story, one that had inspired me initially in order to come to Diamond Standard is this gentleman right here, our founder and CEO at Diamond Standard, Cormac Kinney. A little bit of background about Cormac that I found compelling and I think is appropriate to share here in this format is that Cormac has innovations cited in nearly 4,000 US patents. He's been the founder of 4 software startups acquired by public companies. Cormac is definitively a quant finance pioneer. He actually invented heat maps, which I find to be completely fascinating. And he's designed over 100 institutional trading systems. He's also perfected sentiment analysis for statistical arbitrage. He's used it to manage over $500 million for Tudor and for Millennium. And most recently, he built a business social network integrated into premium news publications, and that was acquired by News Corp, small company that you may have heard of. Cormac studied computer science at Carnegie Mellon, and that mind of his was had his curiosity piqued by diamonds. About 5 years ago, even more piqued, he started to conceive of the idea of Diamond Standard. And the reason why he was so intrigued by diamonds and frankly, the dysfunction of the diamond industry is because of his wife, Mimi So. So Cormac's wife is a celebrity jewelry designer. I actually learned yesterday that she was the jewelry designer for the show Sex and the City, which I find fascinating as well. And she also designed the wedding bands for David Bowie and Iman, and I think Sylvester Stallone also. Anyway, Mimi's been a very successful jewelry designer for many years. And over the dinner table, she would share with Cormac that the diamond industry is dysfunctional. And as we all know, there can be extreme variations between stones with no standardization and absolutely no fungibility. There are non-linear values based on quantitative, qualitative, and subjective diamond factors. We know that it can be completely subjective. Anybody out there that's purchased a diamond engagement ring understands that sort of like the minute you take it home, that you will most likely not get that money back that you paid for that diamond. So there's no market price. There was no price discovery mechanism. And there was really no regulatory oversight and absolutely, unequivocally, no transparency in the diamond market. So it was a hot topic of conversation in the Kinney household, obviously. And what Cormac realized is that diamonds are truly the missing commodity. And when he did a little bit more of a deep dive about how diamonds were the missing commodity, he realized that they've never been really available to an investor. Now, you could invest in a diamond, but it doesn't, there was no real price discovery, and again, no transparency. And if you try to sell a diamond, absolutely no liquidity. So it can be very compelling. There's dense value, $300,000 per ounce. And there's the ability for Diamond Standard to come in and unlock this previously unaccessible diamonds as a commodity. So Cormac did a little bit more of a deep dive on the statistical analysis, and what he came up with is that diamonds are definitively uncorrelated to stocks, bonds, and other commodities, and even precious metals like gold. And this makes it a really powerful way to diversify your portfolio, but of course, to hedge against inflation. Anybody that's reading the news knows that inflation is through the roof, that the Fed continues to print money, and people are looking for creative ways to diversify their portfolio. So of course, they're looking at things like gold and silver, but now they have the opportunity to look at diamonds. So we at Diamond Standard have created the world's first diamond commodity, regulator-approved diamond commodity. And what you'll see in this graph is that diamonds have outperformed silver, and diamonds have a much lower volatility to gold as well as silver. Diamonds have performed really well in periods of inflation, as you can see in this graph. And what happens is the purchasing power of dollars goes down, and then very savvy investors say, okay, I prefer to have hard assets. And I want to be able to hedge against inflation with that hard asset. So when you're engaging with Diamond Standard and owning a Diamond Standard coin, you own a commodity, and your asset is not someone else's liability. You actually own that asset. We're going to talk a little bit more about the Diamond Standard coin and the genesis of the Diamond Standard coin. But first, I wanted to share this slide. This slide for me was the most compelling. And what it speaks to is the idea that of the $9 trillion worth of gold, approximately 28% of that gold is allocated to individual investors, banks, but as a hedge against inflation. Diamonds, there are $1.2 trillion worth of diamonds that have been mined from God's good earth. That is more than silver, palladium, platinum, rhodium combined. Now, if you drill down and look at silver, platinum, palladium, rhodium, you'll notice that approximately, give or take a few percent points, 15% of each of those piles of silver, platinum, palladium, or rhodium are fully allocated to individual retail investors and or banks. But then you take a look at diamonds. Of the $1.2 trillion worth of diamonds, less than 1% is held by individuals like you and me as a hedge against inflation. It's just in the past not been a good way for individual investors to diversify their portfolio. They haven't had access to diamonds as an investment until today. So what's the vision for Diamond Standard? Well, I already spoke to you about how I believe Cormac is definitively a genius, and Cormac believes that Diamond Standard is in fact his masterpiece. How come? Because of this. This is the world's first regulator-approved diamond commodity. Now, what makes the Diamond Standard coin so brilliant is the patented microchip that's embedded in the actual physical Diamond Standard coin. And what that microchip does, when you purchase a Diamond Standard coin, you are then issued 10,000 tokens. Those tokens will eventually be able to be converted into our cryptocurrency, Bitcarbon. That cryptocurrency will most likely launch in the summer of 2022. Now, each Diamond Standard coin has the same geological value of diamonds in each and every coin. This is the literal Diamond Standard. So let's talk about how we got to the Diamond Standard coin, the manner with which we manufacture the Diamond Standard coins, and why it's such a compelling investment. So if you look at the ecosystem that Diamond Standard has created, you'll see that we have, again, the world's first regulator-approved diamond commodity. That's the Diamond Standard coin. We will begin production of Diamond Standard bars. We already have regulatory approval for the futures contracts on the CME. We're launching an ETF with a large bank in Canada that will trade on the Toronto Stock Exchange. And as we continue to grow, we will, as I said earlier, eventually launch Bitcarbon, our own cryptocurrency. Now, one of the reasons why Diamond Standard is so compelling is because when Cormac conceived of launching Diamond Standard and creating the Diamond Standard coin, he knew that in order for us to be a viable option for investors, we needed to proactively be very heavy regulated. So the Bermuda Monetary Authority is our regulator. We're actively audited by Deloitte, and we are fully above board when it comes to regulatory and compliance. Now, the reason why we needed to do this is, and I should mention that all diamonds are GIA certified, and the diamond standard coins are manufactured in IGI Studios. So there are two competing factions that are third-party authenticators of each diamond standard coin. And what does this do? This creates fairness, full transparency, which wasn't available before within the diamond industry, consistency, and of course, liquidity. And this all took, about 5 years of research, development, regulator approval, and we're just now coming out. We have unlocked that $1.2 trillion market, so that the thesis of that $1.2 trillion going from 1% to potentially 15% is a $180 billion green pasture. So let's talk about the genesis of Diamond Standard and how it all started. Well, it all started with our partners, Horizon Kinetics. They were our first equity investor in December of 2020. With their investment, we then started to issue our initial public offering. That initial public offering was for $25 million. Now, earlier I mentioned that we are regulated by the Bermuda Monetary Authority, and I want to make clear that 25 million was not an arbitrary number. 25 million is the number that the Bermuda Monetary Authority allowed for us to sell diamond standard coins. You'll notice here that the Wall Street Journal picked this up, easy diamond trading set to be available for the first time. We issued that initial public offering in February of 2021, and we were oversubscribed by about 30%. So the investment community was thirsty for someone to come and unlock the diamonds as a commodity. So we went about ingesting the payment for those specific diamond standard coins, and then we went about the business of manufacturing each diamond standard coin. So this visualization is of our optimizer. So this is definitively a commodity created by computer science. This is patented technology. This is AI that Cormac created. And as a market maker, Diamond Standard bids on millions of diamonds from hundreds of countries, and we buy the equivalent statistical samples that achieve that literal diamond standard. And again, every coin contains an optimized set of natural diamonds from that sample that we've purchased from around the world. They also have the same exact geological scarcity of carat, weight, color, as well as clarity. Every sample and every coin are public, and the coins are designed to trade at the same current market price, whatever that might be. This is the world's first fully transparent diamond exchange. You can see exactly what was paid for each GIA-rated diamond. And as we ingest those diamonds, we then put them into the optimizer, and the optimizer tells us which GIA-rated diamonds should be included in each diamond standard coin. So let's go to the next slide and talk about how do we make a fungible diamond commodity. I'd like to point out that each of the diamonds that are in a diamond standard coin are only GIA certified, and they usually range between 0.17 and about 0.75 carats. It's only a small percentage of diamonds that are much, much larger than that. I wasn't aware of that before I started at Diamond Standard, but the majority of diamonds out there of that 1.2 trillion, of which we're, the vision is to have that 15% of that 1.2 trillion allocated as an investment. That is the actual range of carats that are into the diamond standard coins. To answer a couple of FAQs, no, we do not buy lab-grown diamonds. We do not buy uncut diamonds. That is so that we may prove the provenance of each of the diamonds that are included in each and every diamond standard coin. This is critical, so that we must have them GIA rated. They are IGI assembled. And then once the diamond standard coin is placed onto the blockchain, that then proves the provenance from another perspective. And I find this to be one of the most fascinating features, that if in fact Cormac wanted to create the diamond standard coin 3 to 5 years ago, it wouldn't have been possible. There wouldn't have been the adoption of the blockchain globally. There wouldn't have been a comfort level with blockchain. It is critical that we have access to blockchain technology in order to prove that provenance, so that individual investors can track the literal diamonds that are in their actual fungible diamond standard coin. So our computer picks those natural diamonds according to a fixed public recipe. That recipe specifies that carat color, clarity, and other factors. And as those gemological factors improve, those stones are the ones that are set to add to the same geological scarcity in each individual diamond standard coin. And this forces the computer to always make sets that are fungible, hugely compelling for an investor. So let's talk about why it's so game changing, right? I mentioned that you get assigned tokens. Those tokens will eventually be able to be converted to our cryptocurrency, Bitcarbon. But again, critical to everything here is that the diamond standard coin, once the production is complete, is placed on the blockchain in order to track that provenance. So you can then list and trade on any compatible ERC20 cryptocurrency exchange once we launch Bitcarbon. Very compelling, a first of its kind, and an absolute and definitive innovation in the financial world. So let's talk about the technology that's associated with the coins as well as the bars. Of course, it's advanced technology, but it allows for remote audit, instant authentication, and super easy storage. So I talked about how it's about $300,000 per ounce for diamonds. That is a lot lighter than if you're trying to store gold, obviously. So I also wanted to point out that there is a unique fingerprint for each of the diamonds that are placed into a diamond bar and or a diamond standard coin. And every coin, as I mentioned, contains slightly different diamonds, but it's the same geological value. So for example, two diamonds next to each other may have a different number of diamonds. One might have 7 and one might have 8. However, they are still always going to add up to that public standard because they have the same exact geological value. The AI that is utilized in order to do this is based on math, transparency, and automated market making and optimization. That technology definitively did not exist 5 or 6 years ago. The blockchain is critical so that everything that Diamond Standard does is public, and everyone can find out where the diamonds came from, the provenance of those diamonds from around the world via the blockchain. Again, hugely compelling and never before done. Once you purchase your Diamond Standard coin or bar, you can hold it in a custodial facility. We work with Brinks as our custodian. You don't have to pay state tax if you keep it in that custodian. If you do have it delivered, you absolutely do have to pay taxes on that. But nearly 100% of our initial public engagement of that $25 million worth of that IPO have opted this route in order to hold it in a custodial facility. However, we did notice that some of the larger buyers of the Diamond Standard coins tend to take at least one Diamond Standard coin for delivery. You think that it's just because it's a talking piece and people want to have a conversation when they throw a cocktail party. But who knows? Seems like it's just something that's interesting to people and they want to show it off to their friends. So inside each of those coins and bars, as I mentioned earlier, there's a computer chip, a wireless computer chip. This ensures that the custodian can't falsify and anyone can verify. So if it's being held in a custodial Brinks facility, you can log into our website or our app and you could say, hey, coin, are you still there? I know the GIA rated diamonds that are inside of this specific coin. So you can audit it. It stores that blockchain token there's a vault receipt, and you could sell the token on an exchange eventually. So it's instant authentication, the ability for you to check in on your diamonds and check in on your investment, even if it's being held in the Brinks facility. I love this next slide because it is a question that always comes up with whomever I'm speaking with. They hear cryptocurrency, they hear the term blockchain, and inevitably the conversation around Bitcoin comes up. When we start talking about it being a commodity, and I start explaining that between gold, silver, palladium, rhodium, etc., there's about 15% allocation of each of those commodities. And I talk about the $1.2 trillion, and there's less than 1% allocated for diamonds. People then start talking about gold. So let's walk through this. Gold, is it regulator approved? Absolutely. Bitcoin? No. Diamond Standard? Definitively. The Bermuda Monetary Authority is our regulator. Underlying value, gold is a natural commodity, just like the Diamond Standard coin. Bitcoin is computer code. Scarcity, naturally scarce and elastic, is gold. Similarly with Diamond Standard coin, Bitcoin has artificial scarcity and it's inelastic. Transactions, brokers, local, physical for gold. It's super simple, just like Bitcoin, electronic, global, and instant. Storage for gold, as you know, is high cost. Storage for Bitcoin and Diamond Standard coins are definitively low cost. Authentication can be difficult with gold. X-ray for Bitcoin and in the Diamond Standard coin, it's instant. Securities, futures and ETFs for gold, futures for Bitcoin, Diamond Standard coin, futures and ETFs pending regulatory approval. However, you will notice in this slide, which I get an absolute kick out of, the Diamond Standard coin as the world's first regulator-approved diamond commodity holds all of the best features of both gold as well as Bitcoin. It is regulator approved. It is a natural commodity. It is naturally scarce and elastic. It can be traded electronically, globally, and instantly. It is low cost, instant authentication. Futures contracts are regulator approved and ETFs are pending. So let's discuss what has happened with diamonds, pardon me, as an investment and where we see the products for the Diamond Standard organization to continue to unravel in front of different diamond investors and how they want to participate in that. So we can now map out several inflection points. And as each new product opens up, you'll notice that there's the Diamond Standard IPO, then there's a trust, then there's the futures on the CME, options on the MIAX, ETF, broker distribution, commodities, indices. I want to just discuss the trust right now. So in February of 2022, we're launching a fund. Then there will be the futures contract and ETF. I mentioned earlier that we're working with a Canadian bank where the ETF will be traded on the Toronto Stock Exchange. But you can see that the roadmap for each of the products that Diamond Standard is launching will continue to build the demand of diamonds from planned product launches and all of those regulator approvals that we've been able to roadmap for us. So let's talk about the specific Diamond Standard coin and initial investors in Diamond Standard who purchased those Diamond Standard coins. So what we'd like to address is no matter what we've created theoretically or what we've hypothesized, this is actually happening. So in February, when the IPO launched, we had initial investors that paid $5,000 for each of their Diamond Standard coins. Those coins today, it is mid-January, are trading at $6,100, a 20% return for those initial investors. So the initial investors of the Diamond Standard coins, they're already seeing a wonderful return on that investment. I do want to discuss the fact that we did a brief exercise based on the diamonds that are embedded in the initial Diamond Standard coins. And that exercise included a third-party appraisal. I'm not going to mention the name of the company, but that third-party appraiser recommends wholesale prices for GIA-rated diamonds. So our team went to that third-party appraisal of the GIA-rated diamonds that were placed into the diamond standard coins for the IPO investors. And when they did the cross analysis of looking at that third party appraisal and the diamonds that were placed into our initial investors in the IPO, each $5,000 coin averaged a value from the from that third party appraiser of approximately $7,300. Now, the reason why we were able to do that is that when you buy the coin today, all of this is a completely untapped market. But when you buy that coin, and we then purchase coins through the world's first transparent diamond exchange, because it's done through patented AI, it is exceptionally efficient diamond buying. So you are reaping the benefits of the patented technology that Cormac has developed on the back end when we're purchasing diamonds and placing them into the coins. Thought that that was hugely compelling for me because, frankly, I'm also an investor. I own 2 diamond standard coins, one for each of my little girls. So what has it been doing if you take a look at what's happening on Bloomberg? So the more that we buy, the greater the demand. And in addition to the existing diamond market, that continues to go up. And as it starts to become institutionalized, you start to see really compelling data. So gold, silver, and the S&P gained 400%. Diamonds only yielded 11% over 15 years, relatively flat, because investors did not have access to diamonds until now. So we launched the diamond standard coin in February. You could see where that IPO was. We got regulator approval as the world's first diamond commodity. You could see where the announcement was. You could see where the IPO is. And then diamonds are now up 35%. Since we created this visualization, diamonds have actually outperformed the S&P. And it's just getting started, right? We believe that securities may drive investor demand once the futures launch, once the ETF is available. The future is bright. So what's the roadmap look like for Diamond Standard? Let's talk about that a little bit. So we've created the world's first regulator-approved diamond commodity, the physical commodity, which is what you see to the left, the Diamond Standard coin. So after those years of receiving regulator approval, now all of those different competing firms that, well, pardon me, we know that the different diamonds that we purchase are graded by 2 competing factions, GIA and IGI. The futures contracts are approved to be on the CME Globex, as you can see here. We will eventually develop the underlying liquidity on a spot market. The futures contracts will give us a national market price, and we will continue to launch our products as we continue to grow as a company. What does the definitive ecosystem look like? Let's talk about that a little bit. So you'll see on the upper left-hand corner, there's Bitcarbon. Again, I mentioned that will most likely launch in the summer of 2022. We have launched standard coins. If there's interest in purchasing a Diamond Standard coin as an investment in the commodities market, you can certainly go to diamondstandard.co and purchase a coin on your own. When we launch the fund in February, you do need to be an accredited investor, but the minimum engagement in that fund is $10,000. Right now, as I mentioned earlier, the Diamond Standard coins are priced at about $6,100. Again, the Diamond Standard coins are held in Brinks facilities in Delaware, so you don't have to worry about paying taxes. And we are seeing a great deal of attention being paid to the Diamond Standard coins because we have absolutely unlocked that $1.2 trillion market. So let's review some FAQs before we get to the conclusion. What methods of payment do you accept for Diamond Standard coin purchases? Pretty simple, pretty standard. Wire transfers, credit cards, ACH, and ETH. Of course, you have to pass KYC and make you get through that. We do have a chief compliance officer that handles that for us. Do you use lab-grown diamonds? No, we only use natural diamonds in the coins. Each coin will have 8 to 9 diamonds, on average 3 carats. If a coin has less weight, the diamonds have higher clarity or better color. What are the KYC requirements that I just mentioned? So for US individuals, the front and back of a license and a selfie. For non-US citizens, 2 copies of proof. Relatively simple and straightforward. Nothing too crazy. Not too many hoops to jump through. So again, if you want to purchase a Diamond Standard coin, all you need to do is go to diamondstandard.co. In February, we'll be launching the fund. Again, a $10,000 minimum for accredited investors. I will conclude the Diamond Standard webinar at this point. Again, my name is Chris Desi, Chief Revenue Officer at Diamond Standard. If you'd like to ask me any questions about this webinar or anything in the future that we have planned at Diamond Standard, please feel comfortable to email me. My email is very simple, Chris, C-H-R-I-S, at diamondstandard.co, or you can call me, 646-645-4171, or just go ahead and shoot me a text. I've also provided Andrew Miller's contact information. He's our Senior Director of Sales, as well as Cormac, our founder and CEO. I thank you. Have a wonderful day.